Jamaica, and today she'll be speaking to us on assessing the effectiveness of debt restructuring and its impact on the financial sector. Dr. Marlene, if you're on the call, please let us hear you.
Good morning, everyone. Are you hearing me?
Yes, please, we can hear you.
Yes. Okay, so I am really happy to be here this morning and to speak to you about assessing the effectiveness of our debt restructuring. I think that this is very important to you at this time. Let me thank Black Star Group for inviting me to participate in this critical and timely webinar and for the opportunities to share our experience. As you probably know, we have had two major debt exchanges, one that was launched in 2010 and the other which was launched in 2013. Now, our debt exchange that was launched in 2010 was really pushed because of our debt to GDP at the end of 2009, where our debt to GDP was 135%. Now, obviously, that is unsustainable. I'm aware that this will be of significant interest to you in Ghana as you currently navigate the path to restructure your domestic and external debts, which, as I understand, is a condition set by the International Monetary Fund for a $3 billion bailout secured in May of this year. I want to continue where Mr. Nelson left off, because he indicated that you have to understand the problem. You have to look at behavioral changes. You have to look at new products and innovate, influence policy, and engage stakeholders. And these are some core principles that must be applied after you, well, even before, but certainly after you have had your debt restructuring. The narrative for this, for our restructuring and the conditions for lending and the reasons for this action is only too familiar with the Jamaican government or people, and especially the financial sector. When in 2010, we embarked on the first 700 billion exchange program, which was called the Jamaica Debt Exchange. And I heard Mr. Nelson speak about a point that you don't want to go there and have to go there again. No, that was not the case. That was the case with the Jamaican government. We went in 2010, and then we had to go back with the National Debt Exchange, where the entire marketable Jamaican securities of 860 billion was the subject again of an exchange. I wish to borrow from the Financial Times of 2013, which summed up where we were at that time at the last exchange. And they said, Jamaican government is fighting to restore credibility with markets for a second time in 3 years to stave off economic crisis. And this was a position that we faced while all bondholders at the point decided they were going to accept the debt restructuring. We did not have a haircut, but we did accept the restructuring of the debt, longer tenures, etc. But what is most critical, I think, is a statement during that time that was made by the then Finance Minister, Dr. Peter Phillip. And he said that the new program consists of front-loading, sweeping actions by the government, combined with an outside stakeholder monitoring process and an internal implementation process. He further pointed out that the more fundamental reason for the comprehensive move was that politically and financially, Jamaica could not contemplate failure. So, you know, you are down in the valley, you want to go back up to the mountain, you cannot contemplate failure. And that is where we were, needing to take a comprehensive look at our fiscal and monetary frameworks, our governance, and I want to underscore governance structure, and our benchmark requirements to improve our financial and economic conditions. You may be facing similar situations that we faced at the time as well, because we had reduced tax revenue, we had unsustainable debt dynamics, mainly due to bunching of maturities of these bonds, increased financing risk due to short-term demand, increased domestic interest rate, and increased reliance on domestic financing, which crowded out the productive sector. And I heard, listening to Mr. Nelson, that's the same thing we're talking about, the crowding out. And as a result of that, stymieing of innovation, because everybody gets lazy. And limited access, we had limited access to international capital. As a matter of fact, when you look on what we had in terms of the rating agencies, the three major agencies rated us as a category C. And that is just one step away from the lowest rating of D, which says that, we are at the bottom of the pile in terms of how markets saw us. And our debt at that time to GDP was over 140%. Is it therefore against that background that we must assess, back to the topic, the effectiveness of the debt restructuring and its impact on the financial sector? We must also bear in mind other key imperatives in Jamaica's move to restructure our debts and the background to the Jamaica economic program. And, I want to state the economic program, because it's not about just restructuring the debt, because it is a journey. It is not the buy all and end all. So some of our objectives was to raise real GDP growth, reduce, and a pillar for that was looking at the growth competitiveness and the ease of doing business. And second objective was that of reducing public debt ratio. And again, we had to look at what is a pillar in respect to this. It was looking at an active debt management program, because until you have that in place, the measurements, you can't measure, you don't know how to get in and out of positions. So the active debt management program was necessary. Then we had to look at another objective, was the fiscal discipline and accountability. Again, discipline, behavior change, as Mr. Nelson spoke to. And that we felt would allow for low cost multilateral and bilateral funding, which we were locked out of in terms of the cost of getting those sort of loan, or even just getting an engagement with the multilaterals and bilaterals. Then the next objective was that of maintaining fiscal stability. And the pillar that we looked at is fiscal consolidating strategies. So looking at strategies and structural and governance reform, definitely having to look again at how we change our behavior and also how we influence policy. I want to just go back to what Mr. Nelson said, because obviously these are some of the things that we need to do. We will return to see how we fared in respect to these objectives and pillars. However, I wish to allow you to put into perspective our most recent, and that is the one in 2013, and that's the NDX. In summary, the NDX involved 25 series of Jamaican dollar denominated securities, US dollar securities denominated, and inflation index bonds at various maturities. The country reduced the bonds from 25 to 21. I heard again referencing to Mr. Nelson about Singapore less amounts, but deeper in terms of those bonds. Well, we reduced from 25 to 21. We lowered the coupon rate on the debt between 1% and 5% and extended most of the maturities by 3 to 5 years. And in some cases, we extended it to 10 years. Our government also set a goal of having debt to GDP ratio of 95% within 7 years. That was down from 140%. And before the COVID, and I know everyone was impacted by COVID, before that COVID, we moved from the 140% that I spoke about when we had that crisis in 2013, when we did the debt exchange, to 94.26%. But it inched up naturally, I think, to 109.68% in 2020 during the COVID period. And currently, so we are talking about impact of the debt exchange. Currently, we are in July 2023 at 77.1% debt to GDP. And we're expected to have that reduced further to 60% by 2028. What have we done? The government has maintained a tight rein on its fiscal and monetary policies. And in a recent review by Fitch, so I'm going back to where we were in 2013, where we were at C. And in a recent review by Fitch, that's a rating agency, it summarized what we have done, and in giving us in April an outlook, which was revised from stable to positive. So we are at B, reflects our significant progress with debt restructuring despite COVID-19 pandemic shock. The report speaks to our stability-oriented institutional framework, because obviously we looked at our framework and how we were going to improve on that. And the favorable financing, so having had the debt restructuring in 2013, that's the NDX, the last one, we have been able now to have favorable financing conditions, including our most recent IMF facility. And the IMF facility that we have now, really what it is standby. It is in relation more to looking at climate resilient activities, which is important as we mature our environment. Public debt has fallen again following the temporary increase in 2020, as I said. Our B+ rating is supported by the World Bank. So we're talking about the various rating agencies looking at us and saying we are now a B+, which is really, in terms of the rating, attractive. There are still issues that are dogging us, I must say, for us to get the best results out of the restructuring exercise. And these are high crime rate, which we have to work on, low productivity, which is still a factor, and it is going to take time. We know, especially having slept for so many years with this high debt, which was mopping up productivity, and we have weak demographics. These have resulted in low single-digit prospect for growth. Fitch projects, based on the objective that the Jamaican government has set and the actualization of the core elements of our plan, a decline in debt to GDP of 78% by 2023 and around 70% in 2026. But obviously, we are still working on our target of 60% that we set ourselves for 2028, even though they think that it is challenging. We are pursuing our fundamental plans. And so, for example, one of the objects of the restructuring that I spoke earlier about was that of raising the real GDP growth, and a pillar on which it sits was improving competitiveness. So obviously you have your objectives, you have the pillars, And one of those was improving the competitiveness and ease of doing business. Jamaica has moved up from 71, the 71st place, to 64 in the world, which puts us as first in the Caribbean in respect to the ease of doing business, and 6th in the Latin American and the Caribbean region. So you can see that the breathing space that we have got, as I said, it's not a one-time event. It is a journey, and the decisions and the pain and the process that we have taken to improve our ease of doing business, that is a positive step in terms of having that debt restructuring as well. It cannot be overstated that the mere debt restructuring is not the be-all and end-all of the Jamaica program, which is not called the Jamaica Debt Restructuring Program, but the Jamaica Economic Program, as the debt speaks to just one limb, with others playing an active role in us not having to traverse the road of debt restructuring another time. Primary debt surpluses are expected to be the key driver in our debt decline, which must be put in the context of Jamaica's now strong stability and economic policy framework built on 2 pillars: inflation targeting, monetary policy, and fiscal policies anchored on debt restructuring targets. Now, what are our results? I've spoke to some of them earlier, but the government has built a record of fiscal prudence that has gained credibility in recent years. I'd like to strongly posit, though, that this has not been a government effort solely, but has been grounded and assisted by the people of Jamaica. A key committee that has kept successive governments accountable is what we call the Economic Program Oversight Committee, or EPOC, which was established in 2013. I don't know what you have done in wake of the your debt exchange, but what I feel was very important and still very important to us was that committee, the Economic Program Oversight Committee. And what it was established to do was to monitor fiscal, monetary, and financial indicators. It was established also to help with the implementation of Jamaica's economic reform under its 2013 agreement with the IMF. The committee comprises, and very critical to the composition, and that's I'm going to go back to Mr. Nelson, engaging of stakeholders. Critical to that was the composition, which was private sector, public sector, and civil society. All have, and you notice I say have, not had, all having a part to play in the committee. The committee mandate has a mandate to advise the public of any concerns or development through traditional and digital media, and they have been doing that consistently. Quite recently, the country was pleased to hear of the results of how we are doing from EPOC. We are pleased with EPOC, and we are also pleased with the results that they gave to us. The following are the highlights, and they have indicated that inflation rate continues to trend downward at 6.1%. And that is just outside of the Bank of Jamaica is our central bank. And this is just outside of the Bank of Jamaica's target range. If you remember earlier, I said one of the limbs or the pillars was that of inflation targeting. And we are at 6.1%. And in earlier days, the inflation rate was double digits. Our tax revenue grew year over year, and exceeded year-to-date target. That's important again. So the heavy reliance on debt to fund our activities of the government is reduced significantly, while our expenditure grew about 26.1%. It was as a result of adjustment, public sector adjustment in compensation. Our people held strain in terms of compensation until we were better able to increase and look at an overall reform. And that expenditure went up, but our net international reserve remains strong. And as Jamaica kick off the IMF program, this new one that I spoke to you about, we have exceeded our quantitative targets and we are meeting all structural benchmarks. Our GDP grew by 4.2% for the first quarter in 2023, and it surpassed, importantly, our COVID levels. And the debt to GDP exceeded target of the 79.7% to close at 77.1%, down from 94.2% the fiscal year 2021-2022. That is the report of the EPOC, a body that we feel is there to shed light on how we are doing. While this is a snapshot in time, it really speaks to our sustained growth and fiscal management since the debt exchange and during and post the debt exchange program. In summary, since the debt exchange, Jamaica has raised real GDP growth rate, reduced public debt ratio, improved our fiscal discipline and accountability, and has maintained financial stability. And this is despite the fact that we have had political changes, because what we have done, we are committed in terms of how we need to change our behavior. We are committed to the fact that we could not and cannot continue the way we were operating. In reviewing our pillars, we have improved on our ease of doing business. We have instituted through the Bank of Jamaica, and that's our the Central Securities Depository, and the JCSD Trustee Services, and I'm happy to say that that is a subsidiary of the Jamaica Stock Exchange. What we have done, we have instituted through these institutions, arrangements, and other measures to look at and pursue active debt management program. So you can track, if you are looking at repo, how that sits with the underlying security, that there's not over trading of those securities, etc. We have been able to attract low cost multilateral and bilateral funding, and our fiscal consolidation strategies and structural and government reforms are positive and ongoing. The financial markets, I want to speak to that because this is a financial conference. The financial market has benefited as well from the government's reduced appetite for debt at exorbitant interest rates, which crowded out the productive sector. This has created a nimbleness, because obviously after debt restructuring, you have to think, what are you going to give in terms of yields, etc., to your investors? So what has happened is that this window, this breathing space, has created a nimbleness and rethinking in the sector for new products and services. That's the innovation part, and has reshaped research, innovation, and sustainability. The success has moved the financial sector out of the comatose state, and the reduction in interest rate have allowed the sector to lend at attractive rates, thereby improving productivity, competition, and positive returns on investments. Benchmarking to 2011, I must speak to that because I'm from the stock exchange, right? So I'm going to just talk about a little about the stock exchange, and then I'll wrap up. Benchmarking to 2011, the stock exchange has seen an increase in the demand and access to equity capital, and every offer to the market has been oversubscribed. You would not have that before debt exchange because persons would have been able to get, it's about options. Persons would have been able to get interest rates at an exorbitant amount. When with this and the lowering of the government rates, what we see is that persons started to look at, accessing equity capital and allowing the private sector to put those funds into production, allowing for competitiveness, etc. And you could see in terms of the balance sheet, the income statements of companies that are listed on the exchange, that this assisted in their growth and sustainability. Coinciding with the last debt exchange in 2013, the stock exchange recorded exponential growth, and we can track the consistency of our performance from the 2009 Jamaica Debt Exchange until the NDX and beyond. In 1997 to 2008, very significant, a low of 45 companies were listed on the exchange, with today over 100 companies comprising 145 securities now listed on the market. Our combined index moved from 97,000 in 2011. So I'm going a little back from the NDX and a little forward from the JDX. So it has moved in 2011 from 97, and you know what the index represent, 97,134 to 368,591 in 2022. Volumes traded increased by nearly 500%, and value traded increased from 21 billion to 56 billion. So there now the breathing space and activities that started to, unfold in the market. The debt exchange is not an end game, nor a panacea, in that it on itself cannot bear fruit. It's just one limb in a total fiscal and economic reform program. It, however, provides the breathing space and room for resuscitation, recovery, and growth if coupled with the necessary monetary and fiscal policies and governance arrangements and the buy-in, that is the stakeholder engagement and the ability to influence policies and commitment from a country on the way forward. Let me close by taking this opportunity to wish your country well as you embark on your own journey. The journey, we have seen other countries traverse this journey. There will be, no doubt, some pitfall along the way, but the saying goes that it does not take a rocket scientist to learn from others' mistake. So as we report a successful report today on our debt exchange, even without consent from any, I am able to say that in the event that you would like to speak with us further on our own programs, if you find that necessary, we are all game. And again, I say all the best to you.
Thank you, Dr. Street Forrest. I think we're going to need your well wishes. You brought to life a lot of the things that we want to see happening in our country at the moment. So thank you very much. We have a ton of questions for you. And I have one question, but it's into like 3 different parts. So I'm just going to go ahead and ask. So the first part is to ask on, I know you mentioned that you had about 99% participation in your debt exchange. The first question is, for those who did not participate, how did you handle that?
Okay, so for those persons who did not participate, the decision was taken nonetheless to utilize the same measure that we, in terms of the swap. So they were allowed, and I use the term allowed in quote, they were given the same treatment as those who participated.
Sure, that's interesting. So the next question will be, what was the secondary market experience after the restructuring, and how was the behavioral changes with each of the participants?
I didn't hear the first part of the question. What was the market?
The secondary market.
The secondary market. Okay. So
yes.
What was the secondary market experience? Please repeat.
Yes. In terms of trading.
Yes. What was the secondary market experience? And you are talking about for the bonds on the market. The government bonds?
Yes, please.
Yes.
Yes, please.
So the secondary market trading, we still had active trading in those government bonds that were restructured. If you will recall that I said that the market, the fixed income market it's a big market in Jamaica. It really dwarfs the equities market. And obviously, the players in the market still depended on that as a part of the livelihood of the financial sector. So there was not a dampening in the secondary market activities. I think there was renewed confidence in those securities, and the market continued to trade effectively. One of the things that we, as a part of the arrangement with the IMF, was that we had to put in place a trustee services arrangement, which I spoke about with the JSSD trustee area. And what we found is that all those securities would have to be put within a trust format in terms of the trading and the repoing of those securities. And we found that that worked well. So I would say that we did not have any negative trading. If we were to speak about it from a market restructuring, I think that persons were comfortable with where we were, even though, as you know, it was a reduced interest rate.
I just want to ask, I just have one more question, and then I'll pass on to Ishan. So
Yeah.
Just in case your market hadn't been as optimal as it was,
yes,
during that time. So if you, right now, our markets are quite down.
yeah.
So what would you have done different if your market was similar to ours?
So your market in the trading of bonds is down at this point. Is that what you're saying?
Yes.
You know, there is a point, and you would have gone through, just correct me if I'm wrong here, you have gone through already your debt restructuring.
So we've gone through the CD1, there's CD bonds.
Yes.
And we are currently going through a restructuring of the local dollar and then the cocoa bonds.
Yes, I read about the cocoa bonds. So if the market is down at this point as it relates to the debt, the trading of government bonds, I think you have to explore other options in the market in terms of growth. The equities market is a prime example of how to look at diversifications for your various stakeholders, for your various investors. And as I raised the example of what was done in order to look at other avenues for investors in terms of their portfolios, etc. And our stock market created some avenue for that.
Thank you so much. I also have a few questions. You made a point about the restructuring being just a leaf in the book, meaning that there are other things that our government would have to do to ensure that the success of the debt restructuring. You made mention of fiscal adjustments that the Jamaican government did. What fiscal adjustments exactly? I know you mentioned that compensations were reduced, but were there any other where total government expenditure cut down? And what were the main pointers for the fiscal consolidation?
Okay, so as you have indicated, the government had to look at the compensation. Compensation was one of the biggest part of the expenditure in terms of the government. So what we looked at was a complete wage reform in terms of how we were going to be looking at compensation for government. We also reduced, which was part of what we had to do. So we reduced government spending on things like road work, etc. Those are some of the things that we looked at reducing in terms of the budget. The other things that we looked at in that period was how best we could collect our taxes. So tax reform was part of what we also looked at, how to get revenues in. We also looked at not only tax reform in terms of getting those revenue in, but we did look at our GCT, and that's the government consumption tax. We did not, as I recall it, no, we did not increase that. But what we did was to look at PAYE, and that's pay as you earn direct taxation, and that we did some adjustment to that at an increased level. So these are some of the things that we looked at.
Thank you for that. In terms of government raising capital, how were they doing? Were they still issuing treasury bills? And how was participation from the investors, the investor community?
Yes, government still raised capital through the treasury bills, but obviously in keeping with the entire reform, the rates for 180-day, 360-day was significantly reduced, but that it was another avenue for raising capital. But I think in terms of the, as I said, the cooperation with, if there is no other port in call, investors would still mop up those treasury bills. So yes, there was a treasury bill raising capital through treasuries.
Okay.
But at a lower rate.
Yeah, thank you so much. I think in our case as a country, we interest rates dropped temporarily at a point, but they started to climb back up again. And I believe that the government to take a cue from these discussions